Hey all, Choiboy here. Welcome to another video. Today we got the Sharesies Portfolio update for March 2022. Hope you've been all well and staying safe and mentally, sane during these hard times financially and, with all these global events. It's just getting worse and worse over time, isn't it? It's quite unexpected, but we just got to deal with it. Such life is. But there's been a lot of talks about where the stock market's gonna go, especially with the war happening right now in Ukraine, but also where is the house prices going? Are we gonna financially recover properly, or are we gonna be stuck in debt for a long time? How's that gonna impact the interest rates on our savings, but also our mortgages? So many things, just so many things. And I think a lot of you might be hurt from your portfolio value. I'm also on the same boat there. It is looking quite bad, but at the same time, because you're not going to sell it right now, well, you're not supposed to. Trying to keep calm and don't do anything drastic. I guess that's the best thing you can do in a time like now. Overall, there hasn't been too many big events since the last portfolio update, but I'll be going through my portfolio, talk about the value and how it changed since the last portfolio update, and give you some tips and my personal opinions here and there on what I think about the general market and what you could be doing or what you should be looking into. Those kind of things. Very generic, but before we get into it, there is a disclaimer. I'm not a financial advisor. Please take everything I say with a grain of salt because I'm not a professional. I'm also an amateur just like you guys. Please do your own research before you buy or sell anything I talk about in this video. Same as always, and let's get straight into it. So the portfolio value is $14,507. That is around $900 or so higher than the previous portfolio update's value. It was down at around 13.6k or something like that in the previous one. It did come up just a bit. It's very volatile because of Blackberry. So before I go down to show you my company's performances, let's look at the general performance. So we are down negative $6,241. So that is quite a bit. My cash contribution is around $20,000 to this account. So it is currently negative in the principal value, which is not that good, but by all means, just the market's doing its thing. If we look into the returns, the unrealized gains or losses is at negative 13k. That's a lot. So I've lost a lot of money in Plexure and Blackberry, and I've just held on to them. I should be buying more at this point in time, but at the same time, I am saving up for a house, so I'm just being a bit more cautious, not being too hesitant. I don't mind sitting on these stocks for a longer term. It's not that much compared to the grand scheme of things for me, so I am willing to just leave it there if it doesn't return back to break even or higher. So these are the kind of values. The other values will not change because I have not been making cash contributions for quite some time. The simple return is negative 22.89%. If they started earlier this year near the New Year's, then you would see around 10-20% depending on what you have invested in. I know a bunch of people that might have been on 30 to 50% profits in the past 2 years. They would be sitting around break even or like 10%, so they lost a chunk of their profits. So it's normal to see the market being volatile in a time like now. Just don't panic and keep calm and do your research and make sure you're making the right decision every time. Don't be hasty on anything in the financial markets. It will burn you more than it does any good. So just keep that in mind. So going down to the company. So the US company I have, Blackberry. As always, I'm very bullish on Blackberry all the time, and I've been saying this for quite some time. It's in levels that it is quite attractive. $7.83. It has never been this low for such a long time in the past 1 year or so. So it's quite interesting. For people who might be holding Blackberry, it's a good time to dollar cost average because it is quite down compared to where I see the kind of value around $12 is my fair value. I think it dipped quite a bit because of the market and the nature of the company, which is a very small cap kind of growth company compared to the US markets. So that's Blackberry. So if we look into the investments, it's down negative 48%. So in the past portfolio updates, you would have seen this go to like 55%, and I even saw 60%, negative 60%. Then it did kind of come up back to negative 48% return. So it is improving. So it is coming up, as you can see. It did dip down to like around $6 something, then it did come back up to $7.83. So that's good news, as long as can hold it. There hasn't been much news about Blackberry, but basically they've been going through a lot of partnerships, with APEC, Asia Pacific Channel Partners, so distributing their products over to companies in APEC. Also, they have some collaborations going on with China and Marelli and Niagara region partners, so they're expanding their cybersecurity kind of platforms and products to more companies and more countries. So that's really good to see. They will have their fiscal year 2022 and fourth quarter results coming out soon, so I would like to see how that goes along, and I think this will determine how Blackberry is set up for the near future. So I just want to see if there has been any improvements in the past year, which I would expect some, especially with Facebook settlement and stuff like that. There hasn't been too much going on with it. Let's see if anything comes through. Sometimes these settlements take a very long time, so until the reports come out, it won't give too much confidence to existing investors and also new investors. So let's keep an eye on that. The main thing about Blackberry is that once it kind of hooks into the market, and once we get into a time where the economy is really bad, which I'm not saying it will be, but it's a possibility. Plus, when the stock market falls, when unemployment goes up, especially with this war going on, cybersecurity is going to be very, very, very important. So that's the main thing there. Also, the electrifying the vehicles globally. This is a very big global movement, which Blackberry is heavily part of with their Blackberry Ivy. I think I'm very bullish on the potential of the company, and I'm pretty sure they can deliver because they had successful moments back, more than a decade ago. I'm pretty sure they have that same motives, the same kind of culture. There has been a big shift in the direction of the company, but I still think they have the potential to kind of make that a reality. So I still believe in it. I hope that whole meme stock kind of thing over Blackberry is kind of gone now. Wall Street Bets is not really that big compared to back 1 year ago, so hopefully it kind of dies off as a meme stock and it comes up as like a potentially good growth stock for the coming year. So that's my thoughts on Blackberry, but it is improving. It is negative 48% compared to like negative 60%, 55% last time. So I will keep my eye on this one. I would add more cash if I had any. So that is the US stocks. Now, Mainfreight, it is up 4.62%, which is quite funny. So this is the one that came out of the pick a stock for till 7 figures back in February, and it's doing well. It's doing reasonably well. There has been ups and downs, but nothing too drastic, mainly because of the fuel prices, right? So as soon as Russia invaded Ukraine, that kind of started pumping up the fuel prices because Russia is a pretty big kind of fuel supplier, oil and energy supplier. And it's not really good for other countries when other countries are setting up sanctions against Russia. And now they're like, okay, we're not going to supply you guys energy and stuff. So it doesn't work well for the short term because it does put pressure on existing kind of other oil suppliers like Middle East or US or whatnot. So I think in that kind of case, it did kind of bring some uncertainty for Mainfreight because, logistics and supply chain, these guys use a lot of fuel for their trucks, right? And when fuel prices go up, that's not that good. Also, a lot of their trucks might be diesel powered, which means ruck is really important as well. So the New Zealand government did reduce the fuel tax by 25 cents earlier this month, and they will do that for the next 3 months. That is good news for Mainfreight because they pay cheaper fuel, which they kind of rely on. But also, maybe because a lot of their trucks rely on diesel as well, they're looking into ruck reduction. So RUC is the road user charges that you pay for diesel cars and vehicles. The government is currently looking to it, but there hasn't been any implementation of RUC reductions yet, but that would also favor Mainfreight as well. But nonetheless, still a very important business for New Zealand. I don't really expect any bad forecast for this company, but you know, you just gotta keep an eye out because you just never know what's gonna happen. For now, it does look okay. So it is up, it is positive, not negative like some companies I have in my portfolio, so that's good news. So that was Mainfreight. Now we have Rakon. So Rakon has been doing nothing really. It's pretty much similar to all the previous updates in the past month or two. So it's just staying around this level. As you can see, it dropped down a bit in January, then it kind of consolidated through February and March. It hasn't been doing much because their financials are really good. They're rolling out, they're still funding a lot of these kind of infrastructure projects with their products. There's a lot of good news about Rakon in the previous several months. So nothing's changed fundamentally for this company. Also, development doesn't stop. They're in a good position for the medium to long term, in my opinion, at least, because they did gain a lot of new customers. For what I can see, I think they have capitalized on them. So we'll see how they achieved things throughout the next couple of months to years. So still a great pick, Rakon. It's not dipping too much, which I really like. Okay, so that was Rakon. And Plexure, it's just getting worse and worse for Plexure, isn't it? So it's at negative 63.78%. It's dipped quite low. I used to work at Plexure, right? But that was back in 2018 and back in 2020 as well. So I worked there twice now. So I joined when they were around like below 20 cents, around 20 cents or so. So I joined them in June 2018. So they were around 20 cents and it dipped to like 15 cents. Then it started pumping. But, it's down to near that level, which is slightly concerning, but it is understandable with the given kind of situation at the moment. There has been a lot of things going on with Plexure for the past several months with the merge and all these kind of changes, restructures and whatnot. There has been a lot of change in Plexure, executive changes, which can go either way for companies. But I've been looking around in the investor centers and they've been winning some contracts, right? So they have been focusing a lot of their kind of announcements around Task. So there hasn't been too many stuff about Plexure. Like Task is an easier business to sell than Plexure, because Plexure is like an entire kind of backend platform, like an API solution, data analytics and AI and whatnot. Task is more around POS, kiosk and ordering systems and whatnot. So it kind of has that synergy with Plexure, which is why they wanted to do this merge. But it does seem a lot of these wins are coming from Task rather than Plexure. Nonetheless, same company now, so it's good. So they have some contract extensions with Food Co, which they serve other countries. Plexure is always about the international clients, so they really like these kind of other clients in Australia, UK, Singapore and Malaysia, and that's a really nice one there. And Task wins Accor Stadium, mobile app and contract extension, which is really good. Once again, a Task news, POS system, QR code scanning, you got a bunch of these kind of small miniature kind of features which Task sells much better than Plexure. It is definitely harder to sell Plexure's kind of main products. This next one is more familiar to us. So Task and Plexure jointly deploy solution for Tank. Tank, I think a lot of you guys in New Zealand might have heard of Tank, at least tried it at least once. These guys make smoothies and salads and all these kind of healthy things. So that's what Tank is. Just Google it if you don't know. But basically they have been joint to deploy a solution for Tank, which includes implementation of the full Task transaction management platform, including but not limited to point of sale, which is POS, integrated payments, kitchen display, self-service kiosk, online ordering, back office enterprise and configuration tools, web API, and real-time reporting. So these part is kind of like for Plexure, and these things are more for like task, right? So that's how it kind of separates between task and Plexure. But basically, tankers are pretty good news. How did the market react to it? Nothing too much. So this was 16th of March, right? So let's go to 16th of March. So 16th of March, that hit the news. It did nothing and it went even lower. So it seems like people lost a lot of trust for Plexure even with these wins. So I think until the next report comes out, the full year report for Plexure, financial year 2022, yeah, people won't restore their confidence in Plexure otherwise. So I think the next financial results will definitely kind of give a good idea of how Plexure has been doing since the merge, and I think people want Plexure to restore their kind of, you know, good reputation and show them that the dramas has not led the company to the other direction, and they're still very strong and willing to grow and have potential to grow. So I think it's been showing that. Honestly, I think it's just people are quite scared about Plexure now, so it is a bit hard for them, but you know, I still think they have a lot of potential. So that's me. Nothing too much. It's been relatively same old since the dip in January. Nothing too crazy. I hope you guys just do your research properly. Don't touch your portfolio, especially don't sell just because you're losing money, because you're bound to lose money in investing if you always think about the short term. It's always about that long-term goals that kind of makes you wealthy and make good investing decisions. So that's totally up to you, but my advice is just to step back sometimes, just take a breather, do your research, market research, global financial research, economic research, whatever you need to do to make the best decision for your portfolio. Now, if you liked today's video, give it a thumbs up, put a comment down below what you thought. Subscribe to the channel if you're watching without that, because that's illegal in my channel. I'm joking, but bell notifications for my next live updates and live streams and the next Sharesies Portfolio updates and any other beginner specific videos, like I made a how to KiwiSaver video if you click up here. So check that out. I hope you all stay safe, and until next time, I'll catch you later. See ya.